Thanks for watching The Big Reset Investment. Let's dive right in and talk about a crucial player on the financial stage, the Federal Reserve, or the Fed, as it's often called. The Fed is no ordinary bank. It's the central banking system of the United States, a guardian of the country's economic well-being. Its job? Implementing monetary policy, regulating banks, and ensuring the stability of the financial system. Quite a hefty responsibility, wouldn't you agree? Let's break it down. When we talk about implementing monetary policy, we're referring to the Fed's power to influence the availability and cost of money and credit. It's a delicate balancing act, folks. On one hand, the Fed aims to keep inflation low and stable, while on the other, it strives to promote maximum employment. Now, when it comes to regulating banks, the Fed is like a stern schoolmaster. It keeps an eye on banks and other financial institutions, ensuring they are playing by the rules and are financially sound. It's a tough job, but someone's got to do it to keep our financial system safe and secure. As for ensuring the stability of the financial system, think of the Fed as a firefighter, always on the lookout for economic flames that might destabilize our economy. It's their job to keep the system running smoothly, even when the going gets tough. Recently, the Fed has been quite active, responding to various economic conditions. It has used its monetary policy tools to stimulate the economy during downturns, and to cool it off during periods of rapid expansion. It's a never-ending cycle of careful adjustments and readjustments. In essence, the Federal Reserve's role is like the conductor of an orchestra, directing the various instruments to play in harmony, keeping the rhythm of the economy steady, and the melody of growth playing smoothly. Now that we understand the role of the Fed, it's time to look at the job numbers and the labor market. So stay tuned and keep those financial antennas up as we delve deeper into the economic symphony. The labor market reflects the overall health of the economy. It's a simple statement, yet it carries profound implications. Let's take a closer look at the labor market, the recent job numbers, and the unemployment rates to understand their impact on the economy as a whole. In the past few months, we've seen a mixed bag of job numbers. Some sectors are experiencing a boom, while others are still struggling to recover from the economic downturn. The healthcare, technology, and construction sectors, for instance, have seen significant growth. On the other hand, industries like tourism and hospitality are still grappling with the aftermath of global shutdowns. Unemployment rates, too, have seen a roller coaster ride. While there's been a general trend of decline, certain pockets of the population, including young workers and those without a college degree, continue to face higher unemployment rates. This disparity underscores the need for targeted interventions to ensure that the recovery from the economic crisis is inclusive. These job numbers and unemployment rates have a ripple effect on the economy and financial markets. High employment generates income, fuels consumer spending, and ultimately drives economic growth. Conversely, high unemployment can dampen consumer confidence and spending, leading to slower economic growth. But the labor market isn't just about numbers, it's about the nature of work itself, how we work, where we work, and what kind of work we do. And in recent years, we've seen some significant shifts. The rise of remote work, for instance, has been one of the most notable trends. Driven by technological advancements and catalyzed by global events, remote work has become a viable and often preferred option for many workers and employers. It's reshaping our notions of a traditional workplace and presenting new opportunities and challenges. Similarly, we're witnessing the growth of the gig economy. More and more people are choosing flexible, project-based work over traditional 9-to-5 jobs. This shift is creating a more fluid labor market, where workers can quickly move between different jobs and sectors. These changing dynamics of the labor market have far-reaching implications. They influence everything from real estate trends and urban planning to social security systems and labor laws. They also have a significant impact on the economy and financial markets, shaping investment strategies and economic policies. The labor market is crucial to the economy, but so is the evolution of banks and technology. As we navigate these changing landscapes, it's essential to keep an eye on these interconnected factors. They shape our world in more ways than we often realize, and understanding them can give us valuable insights into the future of our economy, our work, and our lives. So stay tuned as we delve deeper into these topics in the upcoming scenes. Banks have been at the heart of our economy for centuries. They have served as the custodians of our wealth, the facilitators of our transactions, and the drivers of our economic growth. But today, banks are standing on the precipice of a technological revolution that threatens to redefine their role in our economy. For the longest time, banks operated on a simple premise. You deposit your money, they lend it out, and they give you a portion of the interest. But technology, my friends, is shaking up this age-old model. The rise of digital banking, for instance, is reshaping the way we interact with our money. No longer do we need to stand in long queues or fill out tedious forms. With just a few taps on our smartphones, we can now pay bills, transfer funds, and even apply for loans. Mobile payment apps have further revolutionized our financial transactions. Remember the time when you had to carry wads of cash or write checks for every purchase? Well, those days are long gone. Today you can just scan a QR code or tap your phone to make a payment. It's quick, it's convenient, and it's safe. However, the most disruptive technology to hit the banking industry is arguably blockchain. This decentralized ledger technology, which underpins cryptocurrencies, has the potential to bring about a paradigm shift in the way banks operate. By eliminating intermediaries, blockchain can make transactions faster, cheaper, and more transparent. It can also provide greater security and privacy for users. But as exciting as these technological advancements are, they also present a host of challenges for banks. They need to adapt to these changes or risk becoming obsolete. They need to invest in new technologies, upgrade their systems, and most importantly, they need to win the trust of their customers in this digital age. Banks also face stiff competition from fintech startups and tech giants who are eyeing a slice of the lucrative financial services market. These new entrants are agile, innovative, and customer-centric. They are not burdened by legacy systems or regulatory constraints, which gives them a competitive edge. But it's not all doom and gloom for banks. Technology also presents a wealth of opportunities. Banks can leverage data analytics to gain insights into customer behavior and offer personalized services. They can use artificial intelligence to automate routine tasks and improve efficiency. And they can harness the power of blockchain to develop new products and services. As we stand on the cusp of this technological revolution, it's clear that the future of banking looks nothing like its past. The lines between banks, tech companies, and fintech startups are blurring. The winners in this new era will be those who can adapt, innovate, and above all, put the customer at the center of their strategy. As technology continues to evolve, one digital asset stands out from the rest: Bitcoin. Bitcoin, the digital gold of the 21st century. It's a phrase we hear often, but what does it truly mean? And more importantly, why is Bitcoin taking over the financial world? In the simplest terms, Bitcoin is a decentralized digital currency, without a central bank or single administrator, that can be sent from user to user on the peer-to-peer Bitcoin network without the need for intermediaries. But it's so much more than that. Bitcoin has been hailed as the future of finance for its potential to disrupt traditional banking systems, democratize financial services, and provide a new form of money that is independent of any state or government. It's a revolutionary concept that has captured the world's attention and is changing the way we think about money and finance. One of the key advantages of Bitcoin is its decentralization. Unlike traditional currencies, which are controlled by central banks, Bitcoin is governed by a network of computers spread across the globe. This means that no single entity has control over the currency, making it resistant to censorship and interference. This decentralization also makes Bitcoin incredibly secure. The Bitcoin network is one of the most secure networks in the world, with a level of security that is unmatched by any other digital asset. Another major advantage of Bitcoin is its limited supply. There will only ever be 21 million Bitcoin in existence. This scarcity is built into the protocol itself and cannot be changed. This makes Bitcoin a potential hedge against inflation, as its value cannot be diluted through the creation of new coins. This is in stark contrast to traditional currencies, which can be devalued through inflationary monetary policies. But Bitcoin is not without its challenges. One of the biggest criticisms of Bitcoin is its volatility. The price of Bitcoin can swing wildly in a short period of time, making it a risky investment for some. However, many argue that this volatility is a natural part of a new and emerging market, and that as the market matures, the price of Bitcoin will become more stable. Another criticism of Bitcoin is its environmental impact. The process of mining Bitcoin, which involves solving complex mathematical problems to validate transactions and secure the network, requires a significant amount of energy. This has led to concerns about the carbon footprint of Bitcoin. However, it's worth noting that the traditional banking system and gold mining industry also consume significant amounts of energy, and many Bitcoin miners are turning to renewable energy sources to power their operations. Despite these challenges, the rise of Bitcoin has been nothing short of phenomenal. Since its creation in 2009, Bitcoin has grown from a niche internet curiosity to a global financial phenomenon. It has sparked a wave of innovation in the financial industry, with banks, businesses, and governments around the world exploring ways to integrate Bitcoin and blockchain technology into their operations. And this is just the beginning. As more people become aware of Bitcoin and its potential, its influence on the financial landscape is only set to grow. Bitcoin is more than just a digital currency, it's a technological revolution, a new form of money, and a potential hedge against inflation. It's changing the way we think about finance and money, and its impact is being felt across the globe. Bitcoin is reshaping the financial landscape, and its influence is only set to grow. We've covered a lot of ground today. We've traversed the landscape of finance and technology, focusing on the power of Bitcoin and its increasing dominance in the world of cryptocurrencies. Let's take a moment to retrace our steps and revisit the key insights we've gathered along the way. We initiated our journey with the Federal Reserve, the pivotal institution that regulates our monetary system. We discussed how the Fed's policies and decisions, particularly in these uncertain times, greatly influence the financial markets, and by extension, the cryptocurrency sector. Then we turned our attention to the labor market and the all-important job numbers. We delved into how these figures, often overlooked, are actually crucial indicators of economic health. They provide valuable insights into consumer confidence and spending, which in turn influence investment trends, including those in the crypto realm. Our journey then took us to the intersection of banks and technology. We explored how the evolution of technology is forcing traditional banks to adapt or risk becoming obsolete. We discussed how blockchain technology, the backbone of cryptocurrencies like Bitcoin, is leading this revolution, providing more secure, efficient, and transparent financial operations. And finally, we arrived at the heart of our discussion: Bitcoin. We highlighted how Bitcoin is not just surviving, but thriving, outpacing other cryptocurrencies and establishing itself as a formidable player in the financial world. We discussed how its decentralized nature, coupled with its potential for high returns, is drawing investors worldwide. As we wrap up, it's clear that we are witnessing a financial revolution powered by Bitcoin. Its impact is felt across various sectors, from the Federal Reserve to the labor market, from traditional banks to the technological evolution. As we move forward, it's essential to stay informed and understand these dynamics to make sound financial decisions. Thanks for watching. Please like, subscribe, and share for more videos.